welcome everyone. My name is Kris Alary. I'm an advisor with Bowie Financial. Welcome to our short video podcast on guaranteed investment funds. We're here today to provide some brief information on some of the industry standard products out there, which will help you make better investment decisions moving forward, and with Bowie Financial as well. If you have any questions or are interested in learning more about what we're speaking about today, please feel free to contact me. My information will be somewhere near this video. So joining me today to talk about the guaranteed investment products is Damita Dai. Damita Dai is a certified financial planner as well as the regional sales director for Desjardin, and she'll be talking about some of the unique features that Desjardin is doing with segregated funds and how they're competing against the other major financial institutions, and some of the great things that they're doing that are completely unique. So Damita Dai, thank you and welcome and thank you for joining me. And without further ado, can you talk a bit about how a segregated fund investment compares to the much more popular mutual fund investment?
For sure, Kris. Thank you for having me there and for having me here, and thank you for the introduction. To make it easier for our audience to follow us today, I actually prepared a presentation. So just bear with me for a second for me to share with you the slides, and then I'll explain further about the question that you just mentioned. Before explaining the difference between mutual fund versus seg fund, let me just share more about what is a mutual fund. So mutual fund is basically, it is a pool of investment where numbers of stocks or bonds are being managed by qualified investment firms with a set of rules around them. And seg funds are pretty much the hybrid of insurance and mutual fund. So it is essentially a mutual fund wrapped around an insurance policy that gives you certain benefit in addition to having all these stocks and bond and the investment firm's expertise. So they actually guarantees a portion or all of your investment. So make it a better choice when we're experiencing the market volatilities under certain market conditions.
Okay, you mentioned a couple interesting points there. One being qualified investment firms. So how does that contribute to a segregated fund investment being less susceptible to volatility?
For sure. So qualified investment firms are basically investment expertise or investment professionals that are constantly analyzing the stock market or the macro economy and analyze what's their exposure towards the whole industry or certain segments. And by having that expertise there and constantly monitoring the market or the investment, it basically provides you better downside protection. But with that being said, of course, there's no investment products that completely erase the risk off the table, but having them managing and overlooking it for our investors, it definitely offers our investors the better peace of mind, right? To help them, to have someone there to help them to manage it.
Absolutely. And on top of that, segregated funds do have some fantastic protection features to guarantee some things that we're going to get into a little bit later. But some of the things I'd like to dive into right away and get your insight on is some of the abilities that segregated funds have to avoid probate and estate tax and costs. Yes. I believe you have a slide to dive into that as well. Would you mind expanding on how segregated funds bypass probate and estate tax?
For sure. And then, Kris, I think you mentioned great points. So there are definitely a lot of additional benefits by investing into seg funds. I'll explain to that, and then I'll further expand on bypassing the probate fee. So first, let me explain what are some additional protections that a seg fund can offer. The first one is that removes volatilities in part or in whole by having that maturity or death benefit guarantee. And the second one is give the investor an opinion on, an option to keep their investment confidential, which you cannot get from investing into any other vehicles. And the third one is bypassing the probate fee and estate fee, and you have the option to designate a beneficiary. And the last one is to have creditor and liability protections.
So when you say because I know this is an important point to highlight, just removing the volatility in part or in whole by having a maturity and death benefit guarantee. And again, I believe you have another slide that kind of compares what an investment product side-by-side comparison would look like, a segregated fund versus a mutual fund. Would you mind kind of diving into that and going to that screen as well?
For sure, for sure. Let me quickly share this comparison, the hidden value of the seg fund. So you can see in the first column, basically, that is the traditional investment that you can see, either a bank offer GIC or bond, stock, or mutual fund. And the second column is by investing into a seg fund. We're comparing in both cases, investing $100 into either product. And you can see when the basically at maturity, or when it's being passed by to the beneficiary. For the traditional investment, you have to pay a estate settlement fee. That includes probate fee, or accounting fee, or legal fee, etc. In total, $10,000. So this varies province by province, but in Toronto, the probate fee is usually about 10%. So you have to pay that out of your pocket. Whereas for seg fund, we bypass the probate fee, which again accounts for 10%. So you are saving that $10,000 and you can pass it on to your beloved one. Yeah, and that's one thing. And on top of that, you can see by having your money invested into a seg fund, the estate bypassing time is only 5 days. And that just can be paid out to the death beneficiary. Whereas for your traditional investment, it usually takes months, sometimes even years, to have it settled and bypassed to the beloved ones. So you can see those are definitely some of the hidden values. One with no probate fee, the other one is the faster estate bypass.
Right. And because you can assign beneficiaries, not to get confused, because you can assign beneficiaries on mutual funds and other investment products as well, but it's bypassing the estate that's the important key here. Because like you had mentioned, if the investment goes through your estate or through your will, it does have to wait for the estate to be settled prior to being dispersed to the beneficiaries of your choosing. Whereas on the segregated fund side, much similar to a life insurance product, it acts outside of the will and outside of the estate, and so is able to be dispersed right away. So it's a way of getting money to your loved ones much faster, as you see there, 5 days. And another great feature is the beneficiary protection features that act against volatility, right? As you see, the $100,000 initial deposit, although the market value had dropped due to market volatility to $92,000, there's a few different protection features that we're going to elaborate a little bit on just a few seconds. But it ends up having a payout of $121,000, or just over it anyway, with a market value of just $92,000. So that's a big difference, and not to mention obviously that it gets there much faster. But so one of the amazing features that Desjardins has, that as far as I've seen, and being someone that deals with all the major financial institutions in the area, nobody has an inflation protection feature like the one that Desjardins has. And I know that it's a very big hot topic issue right now, with inflation obviously increasing since COVID, that it is a growing concern to be keeping up with inflation. And Desjardins again has their hand right on the pulse and has a protection feature to go right in line with that, and again protect the value of your investment holders' dollars. So would you mind kind of elaborating a little bit on the inflation protection that Desjardins has?
For sure, definitely. And Kris, just like you mentioned, we are the only firm that's offering this inflation protection right now. So to help our audience better understand this feature, I have this next slide ready here. And also just to quickly elaborate on a little bit more about what is inflation, and why it's so important for us to take into consideration about inflation risk. So basically, inflation describes the increase in price or the fall of our purchasing power. So let's say if last year when you have to buy a basket of grocery for $4 and this year you have to pay $5, that increase in the price, which is 2.5%, that's the inflation money. That's the inflation. So with higher inflation, basically we're losing our purchasing power, right? So we have to keep in mind of that. And usually inflation is about 1 to 2%, or the 2.5 to the max. But this year we're experiencing a decade high, which is 4.4%. So with that higher inflation, basically we're losing our purchasing power. So the money in our hand is worth less, basically. So in this, how can we capitalize on the higher inflation? We have an answer to that question. So we have this feature which is called inflation-linked reset for the death benefit. So you can see in this graph, this is an example which we're using $100,000 investment and projected in the 12-year time period. So the light gray line, okay, that is the market value of the investment, and you can see it fluctuates. Sometimes it goes up, sometimes it goes down. That's just how the market performs. And the green line is what the investment looks like with this inflation adjustment each year, because we have seen in the past in the past decades that inflation just keeps going up, right? With a steady 2.5 or 3% every single year. And the dotted line is the minimum death benefit. So that is the larger of the market value or the larger of the inflation value. So you can see based on this graph, what it tells you is it doesn't matter if the market goes up or down. As long as you have higher inflation, you are guaranteed to have a higher death benefit than your initial investment value. So this is the way for you to capitalize on the higher inflation number. So let's say I'm just using this year as an example. This year we have this 4.4% inflation number, right? If the market returns $0 this year, your death benefit will still be readjusted to 4.4% higher than the initial value, just because we have this inflation. So again, with this inflation protection, you are guaranteed to receive an increase in your death benefit every year, no matter what happens in the market.
And so just to quickly summarize, and please correct me if I'm wrong, but it allows the investor to have a tremendous amount of protection features for their beneficiaries. So if, for instance, at a minimum, in the case of the market value were to drop, as we saw in the previous example, from the 100,000 to 92, that same 100,000 is at least going to grow by the inflation percentage. Now, keep in mind, it's still going to have that growth opportunity from the market, as we've seen over the years. But in the case if it were to experience a year of volatility and a downward market where it did drop, at least the beneficiary guaranteed amount would still be increasing at the same rate of inflation, which is protecting the value of your dollar, which we are seeing, especially a lot of conservative investors, right? People who want to protect their money, who aren't necessarily comfortable in going into the markets, who are investing in GICs, which of course at the rates of today are fairly low, but it does at least offer that guaranteed protection amount on their investment. So this is kind of the best of both worlds, right? Where you are going into the markets, you are subject to a little bit of volatility. Obviously, there's only so much protection you can have on that, but at least your bottom line, your 100,000 or whatever your amount is at least receives a beneficiary guarantee at 100% of the initial deposit, plus it will increase at inflation or by market value, whichever is higher. So if we do see a great growth period of it increasing 8, 9, 10% in any 1 year, that same 100,000 will now be guaranteed to go to a beneficiary at a value of 110,000, right? And it gets reset each year, which is an incredible feature, especially in the world we have right now, where we are subject to volatility and low interest rates. And so having that protection on the bottom line with great growth potential, it's a tremendous feature that Desjardins has, and I'm very happy to be showing it to our audience.
Yes.
And so I think we'll end our video podcast there. And I look forward to doing more videos with you, as I know Desjardins is doing a lot of great things, and they really have their hand on the pulse of the industry and offering the great protections that investment holders are looking for. So you shared a great deal of terrific information with us. I'm so glad to have you here on this video with me, sharing all the great things that Desjardins is doing. Any final words for our audience before we end our video today?
Of course, I think what I just want to highlight today is that I definitely recommend all of our audience to speak to an investment specialist Kris here, who have a better understand about your personal information, and sit down with him, book a meeting with him to have him understand more about your financial investment goal, so that he can find the most suitable investment product based on your long-term investment goal. So I highly recommend you to speak to Kris and also discuss what are the most suitable investment solutions for you personally. Yeah, that's it.
Well, thank you. I appreciate the kind words. And I look forward to speaking with those who have any questions after watching this video. If there's any interest in diving deeper into Desjardins products, I'm happy to have Damita Dai join me as well to answer any of those questions for you. And of course, have meetings. We are not a fee for service firm, so it is free to give me a call and sit down and get some free information together and go through your situation and see where it is we can help and offer obviously the best available products out there, such as the products spoken about today. So without all that, I'd like to say goodbye to everybody and stay safe and take care. Bye.
Take care.